Welcome back, ladies and gents. Welcome back. It's that time of day again. Boy, time flies when you're having fun. 7:30 a.m. Eastern Time, Monday through Friday. We've got our crude oil morning prep. I'm here. My name is Joseph James. I'm from SchoolOfTrade.com. I have a live trade room Monday through Friday at 8 a.m. Eastern Time. Come out and see me sometime. We offer a free trial right on the website. And of course, I got my good friend, my partner in crime, a colleague, and another graduate of the School of Trade. His name is Marty Errico. Him and his partner, Jeffrey, they do a live broadcast every morning starting at 8:50 directly from the NYMEX exchange. And, of course, I've asked Marty to join me here every morning to provide us with a very unique morning prep. We're going from the screen here in Los Angeles, right? I'm here in my office here in Los Angeles, got my screens up, looking at charts, and we're going to go all the way to the trading floor where Marty's going to be giving us some pit analysis this morning, which I think is a very powerful way to begin your day. Let's get started. First things first, once again, my name is Joseph. Thanks for being here today. Thanks for watching. I'm a technical analyst, which means I'm looking at charts. I'm reading tape. I'm looking for price patterns. I'm not so much focused on fundamentals. I'm focused on technical chart patterns. I'll be providing you with a top-down approach today. A top-down approach means we're going to work our way down slow time frames all the way down to faster time frames. And we'll be analyzing what's happened over the past few months, over the past few weeks, the past few days, and then we're going to finish up looking at the past few hours. I'm going to analyze what happened overnight, specifically what happened coming out of the London trading session. Now, we're talking about the U.S. morning trading session, 8 o'clock till 12 o'clock, which means the previous session to that is the London morning session, right? So we're looking at that session, trying to analyze what's happened overnight. See, I know if I look at London, if I combine that with what's happened over the past few days, the past few weeks, and maybe the past few months, I should be able to anticipate direction at the open. If I can anticipate direction at the open, something tells me we're going to find some high percentage trading opportunities that will come just shortly after 8 o'clock this morning. We usually see that price action kick into gear right after 8 o'clock Eastern Time, Monday through Friday. So top-down approach, slow time frame to fast time frames. Looking what happened overnight, I'll anticipate direction at the open, and we're going to begin trading in our live trade room this morning as of 8 a.m. Eastern Time, according to this plan. Now, I'm just one man. I'm just one man's opinion, and all I've got to work with is my charts. All I've got here is some charts. I've got some data. I'm looking forward to hearing what Marty says, because Marty's the one that's on the ground on the NYMEX exchange. He's the one that had to brave all the elements, taking the train, getting through all the masses into the exchange this morning. And this morning, he's going to tell us the sentiment on the exchange this morning. Well, we know it's summertime. Are we seeing a slow, sloppy exchange? Are we seeing a quiet pit this morning? Are people excited? We're going to listen into Marty and see what his sentiment looks like on the trading floor this morning. The pit analysis is very important. Market direction. Intermarket divergence. He's going to talk about looking at crude oil, RBOB gasoline, heating oil, and Brent crude. Very important we understand how to use those markets. There's intermarket divergence. Some markets lead other markets. He'll be talking about that this morning. Market internals, option prices. Very important, right? These option prices are good leading indicators to where crude's going to be going in the future, right? At least towards market sentiment. And then those always important and oftentimes a little bit confusing for new traders, those important pit session trading levels. Those pit session trading levels, don't forget, Marty's got different time frames than I will use on my screens. So we'll be getting a very different look here at what Marty Errico is seeing directly from the trading floor. All right, enough out of me. Let's jump into it, guys. Roll those sleeves up. We get another great day in front of us here this morning. Now, I'm going to let Marty go over the inventory numbers that came out last night and that are coming out this morning here at 10:30. But the first thing we do every morning is we look at the plan today. What's the plan for this morning? First of all, what day of the week, what week of the month, what month of the year are we in right now? Who knows what's going on today? Wednesday. This is the third week of the month, and it's the month of August. What do we know about this information, guys? Is there anything this is telling us right off the bat? Because we know there are certain days, there are certain weeks, there are certain months that are screaming at us either to be careful or to be a little more aggressive. Let's take a look. On a Wednesday, what do we know about a Wednesday? Wednesday's the middle of the week, right? Hump day. We also know that Wednesdays are notorious for, drum roll please, crude oil inventories. Inventories are the biggest news we get as crude traders, and inventory day is very unique because there's only 2 news events, and let's see if you guys can guess the other one. Crude oil inventories is the only news event. There's actually 2 of them. It's one of the only 2 news events that affect only one market. Can you name the other news event that only affects one market? Crude oil inventories at 10:30 this morning, because it affects only crude oil. We know that all eyes are on crude this time of the day. We know that at 10:30 this morning, we know something big is going to come. We also know that we need to be very careful leading up to that 10:30 news today. Sometimes we get some sloppy price action on a Wednesday morning ahead of those inventory reports as traders are trying to jostle back and forth, right, to figure out what the report's going to come out as. So we know first things first, Wednesday, always a great day, but it comes a little bit of a wrinkle. We've got to be aware of that inventory report today at 10:30, which again may cause price action to be a little bit sluggish as we get started this morning. Right? Nothing guaranteed, but if you start wondering where's the personality, if we start to wonder why is it so sloppy as we open up our day today, we know exactly why, right? It's because of the anticipation of the inventory numbers at 10:30. Now, just a quick run through here. The 3rd week of the month. What's the 3rd week of the month? So we know what Wednesday is all about. What's the 3rd week of the month telling us? Well, 1st week of the month, 2nd week of the month, nothing there. 3rd Friday of every month is, you got it, OPEX. 3rd Friday of every month is OPEX. So OPEX, options expire on the 3rd Friday of every 1 month. What happens every 3 months? Call that quad witching. That's next month, right? That's the 3rd Friday of every 3 months. Okay, so every 1 month it's OPEX. Every 3 months it's quad witching. March. March, can I count? June, September, December. I should know that by now. I've been doing this for 10 years. So we know that OPEX is this Friday, right? OPEX this Friday, the 3rd Friday of every 1 month. So now we know that today being Wacky Wednesday, we know that we have some concerns on our hand today. Wacky Wednesday is classified by large, unexpected blocks of volume, and then just as fast as they come in, they disappear. In other words, the market personality is oftentimes a roller coaster on a Wacky Wednesday. Think about it. If you're a major asset manager and you've got $100 million of other people's money, you are not going to wait until Friday afternoon to start managing your positions. You've got to get out of those positions before Friday at the close of day, and then you've got to get back into positions next Monday morning. So we know that Wednesday, Thursday, and Friday of OPEX week are always going to be the days that we must be aware of the situation. So it sounds like we've got a Wacky Wednesday. We've got inventories at 10:30. It sounds like we're expecting a little bit of inconsistent volume as we go into the news today at 10:30. Then we throw in the month of August. The month of August takes everything that I've said and kicks it up a couple notches. The inconsistencies in the month of August. Did you know the month of August is basically a holiday in Europe? Now, I don't want to make a blanket statement like that because I'm sure there are plenty of Europeans out there that did not, unfortunately, get their month off from their bosses. But in the countries of Italy and Spain, this is very customary. The month of August, they're taking the entire month off, right? Would you want to work in an office building without air conditioning in Spain in the summertime? No, neither would I. So we know that the month of August tends to be a vacation month, at least for Europeans, right? I know here in Los Angeles, California, it seems like everybody's on break the month of August. So we know that because the kids are almost going back to school, because the parents are trying to take advantage of that last little bit of the summertime they've got, we know this week, this 3rd week of August, tends to be, right, one of the most challenging of the month, right? Everybody seems to be on vacation. Price action seems to be a little bit more sluggish than we'd like to see it. So, boy, we're really painting a picture of inconsistencies in price action today, aren't we? The month of August is lower volume. The 3rd week of being OPEX, Wacky Wednesday, inconsistencies in volume. Wednesdays being crude oil inventories, inconsistencies in volume, leading up to the news at 10:30. But then we get the big savior today. Then we get the big savior. What do we have here? Wednesday, August 14th, we get a Red Star news event at 8:30 a.m. I love to see a Red Star news event, right? I love to see a Red Star news event. What does a Red Star news event tell me? Red Star news tells me to expect more volume, expect more volatility. In other words, Red Star news gets more people trading at the same time, which we can expect to be a shot in the arm, right? A little fuel on the fire. That's a bad pun for this type of call today, right? But we know that this 8:30 news, the PPI, the producer prices, that's going to be big, big, big. Now, if you dig into this news report, think about it. We've got inflationary concerns. What's inflationary concerns right now? The Fed's been talking about tapering. Tapering why? Because of deflation. Deflation, the falling of prices. Right now, if we see deflation in our economy, the Fed's going to taper things much faster. So the PPI, the producer prices, the costs of producing goods and services, which are oftentimes passed down to consumers in the form of higher prices. If the producing prices are higher, that is going to be a good thing for crude today. I know it seems like it would be a bad thing, but it will be a good thing for crude today. I have a funny feeling this PPI number is going to be one of the most important news events of the week. It really is. Everybody seems to be all hot and heavy on this Fed tapering right now. And so we know that Fed speak, which we'll hear more from James Bullard later on today at 3:15. Apparently they removed the 145 report they had on there yesterday, or they've moved it up now, I think, a few hours this afternoon. But either way you slice it, though. 8:30 news this morning. That's my Red Star news event. I'm expecting some big stuff here, 8:30 till 9:30 this morning. And then again, it's tough to tell what's going to happen before that 10:30 news. We're going to listen in to hear what Marty's seeing on the exchange this morning. Maybe he's got some feedback on what he's seeing on the floor this morning. It's tough to tell, though, between 8:30 and 10:30 what that personality will look like. Again, because a lot of traders we know are taking this week off, and we know that with that inventory number at 10:30, we may get traders waiting until after 10:35 before they place their bets this morning. All right? So now we know what the deal is today. Set your alarm clock for 8:30 Eastern Time, 10:30 Eastern Time, and then again we got James Bullard speaking. I think he was moved up till 1:45. You can check my blog. We wrote about that last night in the newsletter last night. All right, there's our news today. Now, you're probably saying, Joe, enough of the news. Let's get some charts, my man. Let's grab some charts here. Anchor chart here on crude. Let's get started on it. First things first, the anchor chart for crude oil tells me two things. First thing, it tells me direction. Second thing, it tells me major support and major resistance. So my anchor chart tells me two things: market direction, major support, and major resistance. First of all, can we tell what market direction is right now? No, I cannot. Not on this. Not on this chart. I can't tell what market direction is. Okay? If it was trending lower like it was previously, easy. Trending lower. If it was moving higher like it was earlier this month, easy, right? Moving higher. But now, not so easy. It looks like we're moving sideways. I can't really tell what direction we're moving in right now, but I'm going to be able to do that in just a few moments on a faster time frame. So we're having a little bit of a difficulty finding direction right now. If I had to guess, I would say it's probably going to be higher because you can see we're right at support. So if I had to guess this morning, I would say the direction will be going higher. But again, I'm going to wait to react. I'm not going to predict. Let's keep going. What about support and resistance? Where's major support and major resistance? Well, those are easy. I always go through the motions, right? I always do something like this. What if price goes lower? What if price goes higher? What am I going to run into? And those are my levels. What do I have to worry about if price goes lower? If price goes lower, I've got 105.92, 105.60, 105.36, 104.80, 104.23. The list goes on. You can easily see those levels of support marked below me. I am going to be buying at support. I'm going to be buying at support. With this narrow range, with this price wedge you're seeing right now, we can expect some fake out breakouts. We can expect the volume to be indecisive at the highs and the lows. We'll be buying at these support levels right below us. What about resistance? What resistance levels do we have above us? We've got the top of the wedge. We've got 107.01, 107.20, 107.41, and 108.07. As you can see, very easy to see these resistance levels above us. So now that we've got the resistance, we've got the support, we've tried to define direction. Does this chart tell me any specific thing today? What could I get from this chart? I'm sitting at support. If I had to guess, what direction do you think the easiest move would be? Going higher, absolutely. If we try to go lower, the sellers will run right into the lows of this channel, the lows of this wedge. It'll bump right into the 105.92. Now, there's nothing wrong with price going lower, and then I'll buy it and bring it right back up. Nothing wrong with that. But it is definitely easy to see that the path of least resistance will be buying this morning. Now, again, I've got to wait here to see those buy signals. But from what I can see so far, it looks like buying pullbacks, buying with a price reversal at support levels, or if price starts to rise higher here, looks like buying is going to be the easier direction here, at least at this time. Moving forward, now take a look at a 30-minute chart. This is one of the only time-based charts that I'll use. I'm a big believer in time-based charts, but for certain reasons. You need to have time as a variable in your equation at certain times, and this, of course, a 30-minute chart. I'm going to use a 5-minute, a 15-minute, a 30-minute, a 60-minute chart just to get the time variable in play. What do we see on this VIP chart? We call this our VIP chart. The VIP chart is pretty simple. Again, it's either a 5-minute, a 15-minute, or a 30-minute chart. And what I'm looking for here is I'm looking for ranges. I'm looking for high of day, low of day. I'm looking for previous high of day, previous low of day. I'm looking for weekly highs and weekly lows, right? I'm looking for all the major ranges. That way I know where I am inside of this big forest of price action. Looking at this chart, what can I see right now? Well, first of all, we can see that nice easy wedge, right? The wedge pattern, lower highs, higher lows. That's an easy one. The next thing we see is we've got the previous high of day, right? Again, think about what if price goes higher. If price goes higher, we have the previous high of day at 107.20 and have the previous week high at 107.69. Why do I need those? Why do I care about those? They're very psychological levels. Everybody remembers 107.20. That was yesterday's high. Everybody remembers 107.69. That was last Wednesday, I believe, last Tuesday's high. So we remember these levels. These are psychological levels that traders will be remembering. Bottom line is I will be selling these as resistance and then buying pullbacks above those levels. Okay, same plan. Sell as resistance, buy as support. Sell as resistance, buy as support. Moving lower, I have the previous low of day, 105.56. Previous low of day, 105.03. Way down bottom, 103.62, previous low of day. Again, I'll be coming lower, buying as support, selling as resistance. Buying as support, selling as resistance. Support are levels below us, resistance is levels above us. A level of support quickly becomes a level of resistance as we break through that support. All right, use those previous highs and previous low levels, guys. Those are going to be very, very important levels of support below me and resistance above me. And remember, whenever we get around those previous highs or previous lows, members, you know this, we're looking for the inside-out setup, one of the dozen setups that we teach all of our students as members of School of Trade. Moving forward here, the final chart here is my entry chart, and then I'm going to toss it on over to Marty at the NYMEX Exchange. The entry chart this morning, you can see here, whoa, very narrow range. We can see we've got lots of support, lots of resistance. I've marked these up here, put these up on the blog for you guys this morning. As we go lower, I've got 105.87, 105.49. As we go higher, 106.47 and 106.78-ish, right? Between 106.78 and 106.85, we've got kind of a brick wall of resistance. What this tells me is that I'm going to be expecting to sell the highs, buy the lows. We'll treat this the same way we treat every trading range, and that is buy those lows, sell those highs, avoid those middles, and look for those fake out breakouts. Guys, I'm seeing narrow, consolidated price action in the short term. It looks like we have a little bit easier direction going higher here this morning. But again, it looks a little bit sluggish here today. It looks like we might be waiting here. It's a wacky Wednesday. It's a Wednesday of OpEx. We got inventories today. I can't wait to hear what Marty's seeing on the floor, though, because he can validate some of this information. Marty, is it really that quiet on the floor this morning? Good morning to you. Welcome aboard.
Good morning, JJ. Yeah, it's that quiet on the floor. We are looking at a kind of a slow, subdued morning so far. But look, let's focus on the most important things. All right, well, we had inventories last night. Let me just take the screen over here. And basically what I'm going to do here is we're going to talk about the inventory numbers that hit the board last night. We're going to talk about a couple other variables that can move this market possibly in the next couple of days. So you will be focusing on that. Let's see. Okay. Let's take a look at those inventories here first. You can see that we had API numbers hit the board last night, and we come in with a little bit of a fairly mixed report in just terms of crude. Crude shows a 990,000 barrel draw. Cushing shows a 1.4 million barrel draw. Gasoline shows a build of 1.7. Distillate show a build of 1.1 million. So you can see fairly mixed report. Bullish for crude, bearish for the products. And this is just like last week's number where, remember last week we saw the RBOB and heating oil hold back crude because of a number like this came out on the DOE EIA numbers. So let's kind of pay attention to that and try to consider, right, the RBOB and the heating oil here because it can ultimately hold back crude. But, you know, we got to really give respect to that Cushing number here and that big draw in Cushing of 1.4 million. So, you know, this is overall just a preview of today's number, right? And you can see this is just a preview here. And we have our forecasts for today's number right here. And you can see we're looking for a draw 1.3 million in the crude, 135,000 barrel build, and a draw in the distillates of 500,000. So you can see how we have a little bit of a mixed reading here. That's what the report's calling for. So there you guys go. So market reaction to that, we have seen crude in the overnight session trade a little bit higher. Again, right off the number here, you can see we trade a little bit higher, right? Talking about just reaction right off the number. You can see we end up trading up to about 107, even 107.20 in the overnight session, right? And overall, I really want to kind of respect that 107.20 level, and we really want to respect the lower end of the range. Now, the number on the trading floor that most of the traders are really looking at, right? So we're coming into options expiration actually in 1 day we expire. So we have 1 day till options expiration, and that's when we're going to see a lot of money move out of the September contract and move into the October contract, and that's when it starts our roll. So basically, a lot of the traders are looking for 107.5 because that's where the most open interest is in the options, and that's where they would like to see price, right, in terms of open interest, money volume. So they have a lot of money in the 107.5 strike. So we could definitely see market trade up to 107.5 in the next day or two because that's where we need to really settle out, right? So I believe we could see 107.5. Now, if we close and settle above 107.5, then yes, we will be on our way up to 110. So it's kind of a matter of just where do we go today? If we get up above 107.5, if we close and settle above there, we're gonna be bullish up to 110, and we can just you know, buy pullbacks all day long. So again, the key today is to watch exactly what happens. See if we can get back up to that 107.5. And if we do get up to 107.5, do we close and settle above that level, right? Do we close and settle above it, and then we can probably get some upside here. As you can see, we're consolidating here just a bit, and we're really kind of just narrowing in this little wedge that we have now in the 13 range chart. And again, this RBOB and heating oil, they're kind of indecisive right now. I think they really didn't get a huge reaction in respect to the inventory numbers. I mean, they didn't get any type of reaction from the inventory numbers, to be honest with you. So we're going to continue to keep an eye on them in the pre-market here in the and into the opening bell. Right now, your Brent SEP contract trades about 293.13, heating oil's 303.14, and they're just kind of fading off their high prints from yesterday. Both down about a penny, so really kind of erasing some gains from yesterday. Just like the crude, as you can see, we're down around 106 and a 25. We dipped right down to that 105.90 level. Remember that level that we were talking about yesterday, 105.90? What a big value area that became. Right now, the Brent WTI spread, if you look at it in the SEP and ACA month, you'll see that they are pretty much widening out just a bit here in anticipation of numbers. The Brent crude is still holding levels around basically 108, 109. It depends what contract you're looking at. If you're looking at the October contracts, we're talking 108. If you're looking at the SEP contract, 109. Let's kind of just look at volatility real quick. Volatility holding steady here, 23%. Now that's pretty nice here. We're holding steady and increasing on volatility as we rise, so that's pretty encouraging for some upside here, especially into this expiration and watching exactly what I said before, the money kind of flow out of the September contract going to the October contract. Again, we looked at here you can see we're pretty much sideways here. Again, we're bullish in the Brent WTI spread. We're bullish in the front month calendar spreads, and then in the back month calendar spreads are starting to fade out just a bit, as you can see the bearish indication there. Here we're pretty sideways across the board again in all our other markets here. As you can see, Brent WTI, we're looking at crude, we're looking at RBOB, heating oil, pretty sideways at the moment, slightly lower to sideways, I should say. Looking over into the dollar index is always the case. We have the dollar just a little bit higher again, and we're just kind of sideways just a bit on those markets. All right, let's take a quick look at some levels here. Is always the case, guys. I got your levels here for you. Again, looking at our levels real quickly, you can see we have our high today, ladies and gentlemen. Again, 107.07 from yesterday, 107.01, your high from yesterday. Low, 105.56. Closing settlement number 106.77, and our daily pivot today is going to be at 106.45. Guys, got a little bit of resistance up above at 107.34, 107.90, and 109.35. Support down below at 105.89, 105 even, and also we have 103.55. Again, open interest 201,847. With that here, we have implied volatility 23 to 24%. Vol index 2280, which is almost by 23, and then we've been watching just a lot of increased activity here in all these options. But the most important, I must say, we saw 105 calls to 107, the 105 to 107 and 108 call. They all traded about 4,000 times in the pit yesterday. We saw the 105 to 107, 107 and 108 call spreads come into play. Yes, we did see some call spreading to the upside into this expiration. So this is something that convinces me that we could definitely see some upside here. On the puts, we saw just a little bit of interest in the 104 put, really, in 103.5, but really nothing huge in terms of just activity here in your crude options. All right, moving over to natural gas real quickly here. Pit session high from yesterday, 332.60, a low 326.20. Closing settlement number 328.80. Right, daily pivot today 329.20 with some resistance up above. I got 332.20, 335.60, and 342 even. I got some support down below at 325.80, 322.80, and 316.40. Again, open interest here 161,796, along with the implied volatility around 32%. Front vol index 32% across the board here as we continue to watch really kind of just a little bit of upside here. Again, we're looking for a break above basically 332 even, above 332 even, as I said in the commentary yesterday. Again, in the daily commentary yesterday, we were talking about just a break above 332 even and pop. We'll probably see 345 real simply and easily. So keep your eyes out on those levels for the natural gas. And really across the board, as I mentioned here, we do have a kind of a weird scenario. We have locals pretty much net long into this expiration, and really paper a bit of two sides here, to be honest with you. So today, again, inventory numbers from yesterday and today, we have to really pay attention to these as we kind of roll into today. We really want to see if we can actually live up to these expectations for these inventories today. So again, that's about it for me here. I'm going to throw it back over to JJ. I got to get ready here, and I'll see you guys in all just about, 45 minutes or so?
Absolutely, Marty. Thank you so much. Thank you so much to Marty Yuriko, guys and gals, directly from the NYMEX Exchange here. Very valuable information, and as always, guys, greatly appreciate you braving those elements for us, Marty, every morning and joining us here. And I also want to thank each and every one of you guys. Thank you so much for coming out and joining us here every morning at 7:30 a.m. Eastern Time. Once again, my name is Joseph James. Appreciate you guys coming in and joining us for today's call. I'm at School of Trade. Come out and see me Monday through Friday, 8 o'clock Eastern Time for our live trade room. And don't forget to check out, listen in to Marty and his partner Jeffrey over at Traders Audio. They begin at 8:50 a.m. Eastern Time, just before the opening bell on the NYMEX Exchange. Would you like an invitation to come to tomorrow's broadcast? We can send you one. Shoot me an email, jj@schooloftrade, or over to Marty at Traders Audio. I don't care where you're from. I don't care if you got any experience. I don't care if you've never heard of crude oil before. Shoot us an email. Let us know if you want to have get a private attendance link for tomorrow's broadcast. And while you're at it, let us know what you like. Let us know what you dislike. We love your feedback for these broadcasts. We are trying to make this better and better every single day. Thank you so much, everybody who came in and joined us this morning. Hope you're having a great OPEX week. Don't forget about that news today. 8:30 news, 10:30 news, Wacky Wednesday, OPEX Friday. Now you know the plan. Don't forget to learn it so you can earn it. And we'll see you guys here tomorrow. Same time, same place. We're on a 23-hour and 30-minute break. We'll catch you guys here for a Thirsty Thursday edition tomorrow morning at 7:30 a.m. Eastern Time. Don't miss it. Adios, amigos. Bye-bye for now.